What's going on, guys? Matty Ice here. Welcome back to another episode of Investing with Matty Ice, where I share my investing journey with you guys, specifically when it comes to income ETFs. Today, I want to expand upon that a little bit and dive deeper into my current portfolio, because I realized the other day just how much Bitcoin is taking over my entire portfolio right now because of all the amazing financial products that are being built around it, like BTCI, which is my favorite income ETF right now. And I think it demonstrates just how much of a gift Bitcoin really is to the world. Obviously, owning Bitcoin in and of itself, really, really powerful. We'll talk about that. But now that all of this, we're seeing all this financial infrastructure being built around it, and these different financial products that are in some way, shape, or form associated with Bitcoin, where they're harnessing the power of Bitcoin and creating some type of yield product, for example, like BTCI, where instead of volatility being a flaw, which a lot of times people consider, I don't, but because it's that volatility that's allowed it to have that 30 to 50% compound annual growth rate since inception. Okay, that's a different conversation. But what if now, instead of that volatility being a flaw, what if you could turn that volatility into cash flow that translates and results into a 25 to 30% annual yield? Well, you can now with BTCI. We'll talk about how they do that in a minute. Then you have something like STRC, Stretch from Strategy. They're currently paying 11.25%, guys. And it's backed by, the last time I checked, 57 years of Bitcoin on their balance sheet. And I think they have like 30 months of dividend coverage just in cash, right? 11.25%. 25 to 30% annual yield, just harnessing the volatility of Bitcoin. And with Stretch, they're stripping away the volatility of Bitcoin and still providing this incredible yield. And what it does is it gives the average person the opportunity to build real wealth and to lift themselves and their families out of poverty. Because 11.25% compounded over 20 years, that really adds up, guys. 25 to 30% over a couple of decades, that can build a lot of wealth for people. And that's why I think Bitcoin is such a gift to the world. It's such a powerful asset. And so I want to dive into more detail, dive into my portfolio in a little more detail to show you just kind of the evolution, my investment thesis and thought process. It's not specific financial or investment advice, obviously, but it's just to share with you guys my journey and some of the things that I've learned in the shift that I'm starting to make from these traditional financial assets that we've been told to buy for however many decades. You build that 60-40 stock and bond portfolio, but why would I do that when I have something like Stretch and BTCI available to me, right? And so obviously it started with just Bitcoin. I've been buying Bitcoin for a long time, and we like, a lot of these financial products are brand new. They haven't been around for a significant amount of time. But that's because Bitcoin is still in its infancy, and the infrastructure is being built around it now. We're starting to see some of those products become available to us, and it's just incredibly powerful, right? But the bottom part here is what I really wanted to share with you guys, is kind of the conclusion that I came to after this realization, is that Bitcoin, to me, is not just an asset that I'm going to hold forever. And, maybe I borrow against it at some point in the future, right? To improve my standard of living, to, acquire income producing assets, right? It's not just that asset anymore. I see it as the foundation of everything in my portfolio at this point, because of all the incredibly powerful financial products that are coming out. And so it's this evolution that I know is where, buying Bitcoin, holding it for the long term, waiting 10 to 20 years as the price appreciates, and we're able to tap into more value. Also with more products coming out where, again, it hasn't been that long that we've been able to borrow against our Bitcoin when we want to, when we need to, if we want to take advantage of an investment opportunity or something like that, build wealth in multiple layers, right? That's still pretty new, right? So the original idea was to just buy Bitcoin and hold it long term to preserve our purchasing power, to increase our purchasing power over time. But now we're entering this next phase where things are being built, like all these financial products are being built around Bitcoin. So now we have this incredible asset where we can store value. I've said on this channel many times that Bitcoin is the ideal engineered solution to the store value problem. I learned that from a gentleman at BTC Prague. I'll link to that video down below. It was freaking amazing the way he explains Bitcoin. All right, but so we're storing value long term in Bitcoin, but now we're able to generate all of this cash flow and income from Bitcoin's volatility with things like BTCI, earn yield on Bitcoin linked capital like Stretch, STRC, Stretch from Strategy, where they strip out the volatility and still provide really good yield. And then we could even use that cash flow to acquire more Bitcoin if we wanted to. We'll get into that in a minute. But the point of this evolution that I've noticed is that for me, Bitcoin is no longer passive. I'm not just waiting for 30 years down the line when Bitcoin hits $1 million or $5 million or whatever, right? We're able to start harnessing its power today, now, with these financial products and turn that into Bitcoin's power into cash flow in our lives right now. That is far superior than what these other traditional assets provide us, right? That's why, I just really don't have any interest in these traditional assets anymore, guys. I'm not saying this is it's not financial or investment advice. I'm not saying that they don't have a place in some people's portfolios. They don't have a place in mine, right? And that's because I have so much conviction around Bitcoin, right? But that's why, when I think about things like precious metals, why would I own precious metals when I can own Bitcoin? That's the scarcest monetary asset on the planet, specifically designed to be hard money to preserve purchasing power into the future. In fact, increase that purchasing power. Whereas precious metals, I would say nothing necessarily wrong with them, but are they the ideal store value solution? Not in my opinion. I think Bitcoin is. And, of course, they've outperformed Bitcoin over the last 12 months or whatever. But guys, I don't think in 6 to 12 months with these types of financial decisions. I'm thinking about 10, 20, 30 years in the future. All right. I still own some silver, by the way. I sold a lot of it when it was making its parabolic move, and I reallocated that into BTCI. I'll link that video down below. I did a full breakdown on it. But it's why would I don't know. Why would I buy precious metals when I can own the scarcest monetary asset with a limited, not a scarce, but a limited supply of 21 million Bitcoin? Whereas we don't know how much gold there is. We don't know how much silver there is. And when the price significantly increases with those metals, well, that demand is going to be met by more supply, which is eventually going to bring the price back to equilibrium. Whereas if you have an asset that has a limited fixed supply and an ever increasing amount of demand, what do you think is going to happen to the price? It's probably going to be pretty good, right? S&P 500 index funds, mutual funds, dividend stocks, right? Again, nothing necessarily wrong with them, but why would I even consider anything like that when I have something like BTCI that's earning 25 to 30% yield? Yes, it's volatile, okay? But again, it's that volatility that creates that really, really high yield. So if you're going to take risk in something, if you're going to put money into a volatile asset, why not get the highest amount of yield that you possibly can? All right, yield isn't everything, right? There's some out there that have a higher yield than BTCI, but we'll get into that in a minute, all right? CDs, money markets, bonds, treasuries. Why on earth would I put any of my money into those things when I have something like Stretch that has very, very low volatility? They strip the volatility out of Bitcoin and they turn it into this 11.25% as I record this dividend rate, right? That's backed by Bitcoin. They take the capital, they buy Bitcoin, put it on the balance sheet, makes the balance sheet that much stronger, which means they can support the dividends for even longer. Why would I mess with any of these other things, right? And so for me, Bitcoin is that superior monetary edge. And I like this analogy. It's kind of like, when you look at these Bitcoin associated type of financial products, if you line them up against these traditional assets, it's like lining up a Honda Civic to next to a Lamborghini Aventador and expecting the Honda Civic to keep up. It's just not even close. Bitcoin is just going to smoke these things long term, in my opinion. So obviously the core asset is Bitcoin. That's what I consider just like long term store value. So again, for me, this replaces precious metals. I still own some silver. I just think I think it's fun and cool to own, and it has done well recently. But for me, Bitcoin, like owning spot Bitcoin in cold storage, that's my long-term store value. All right. Long-term purchasing power accelerator. I think that's a good way to put it too. Obviously protecting, like smoking inflation with that 30 to 50% compound annual growth rate. Self-custody control. I love that the sovereignty aspect of Bitcoin. And also, obviously, this is going to be a future collateral asset where I'm going to, at some point in the future, borrow against it to acquire income producing assets or maybe improve my standard of living, whatever, right? But Bitcoin itself is the long-term store of value. So again, has that fixed supply, no dilution, no management risk, no counterparty risk, assuming you have it self-custody. We don't really want to be having our Bitcoin on exchanges. Okay, but this is the foundation for me, right? And so, and why I think these products are so freaking powerful too is because one of the issues that, at least in my opinion, with Bitcoin was a great monetary asset, obviously, over the long run. But the one drawback is we have to wait, right? We have to wait for that price appreciation. You know, obviously too, depending on when you bought it. Like if you bought it at $5,000, even after the 50% crash recently, it's still at $70,000. Like you're probably still doing pretty good, and you could tap into that value. However, you know, a good majority of people have been buying it on the way up, and that's fine. But basically, my point is here, we have to wait for that price appreciation to really start to tap into that value. And there's nothing wrong with that. That's the long game. Okay. But it doesn't translate into any, like it says here, any meaningful lifestyle upgrades. It doesn't really allow us, it doesn't do much for us in the moment, unless you live in a country where your inflation rate is like 50 to 70, 100%, and you need to transact in Bitcoin. Obviously, that's a different scenario. But if you're here in the US, it's more of like it's not really a medium of exchange right now. It is more of a store value asset, right? Where we're going to store our purchasing power, transport it into the future over the long run, right? But financial engineering has changed that now, guys. So let's talk about BTCI. All right, turning volatility into income. I think this is just incredibly powerful. So NEOS, Next Evolution Options Strategy is what that stands for. All right, I'll put a link to their website in the description. They have lots of different income ETFs. So if maybe Bitcoin is a little bit too volatile for you, that's fine. I get it. You'll get there eventually. All right, but you know, they have some amazing income ETFs. My favorite is BTCI because I am such a huge fan of Bitcoin. The way I treat this, the role of BTCI in my portfolio is long-term growth with that high income. It is very volatile, but I'm okay with that. I'm used to it. I've owned Bitcoin for a long time. I've been through the major crashes. I expect it, but it also hurts a lot less, guys, when the volatility of Bitcoin, when the price is coming down, but you're generating a lot of cash flow at the same time, like during that decline, it makes the volatility a lot easier to deal with. Not to mention that volatility is what translates to that extremely high yield, 25 to 30%. That is absolutely insane. But when you understand how BTCI works, it actually makes sense why the yield is so high. It's because Bitcoin's volatility is so high. And what BTCI does, what NEOS does with BTCI is they're basically all they're doing is selling it's a covered call strategy that they're implementing. They're selling covered calls on the portfolio of Bitcoin exposure that they have. That's it. And if you just do a little bit of research on options, all right, which is what a call is, covered call, that's an options contract, okay? It's a big part of the price and premium of an option when you sell it or buy it is volatility. The higher the volatility, the higher the premium for that contract is. And when you're selling those contracts, that's really good for you, right? So as when you have this asset that has really high volatility, you can get really good premium on those contracts. That's why BTCI is able to generate such a high yield. And that's why why would I chase and cross my fingers and hope for an 8 to 10% average annual rate of return in some stupid mutual fund when I can generate cash flow right now with the greatest monetary asset on the planet? Because also with BTCI, we maintain exposure to the Bitcoin price. That's why the price of the ETF is still volatile, right? Because they don't sell the cover calls on the entire portfolio, but that's a good thing. We maintain that exposure to that 30 to 50% compound annual growth rate over the long run while generating a phenomenal yield. So, you know, they're selling the cover calls. That's where the income is coming from. All right, they pay monthly distributions. Right now, what I'm doing is just reinvesting all of the distributions every single month. I'm going to let this thing run and compound over the long run, over a long period of time. And it allows me to get more and more shares, which is amazing because instead of just my own personal income being invested into something like this, I'm now able to take the cash flow that the asset is generating and use that to purchase more shares, which is going to increase my cash flow that much faster. And I just keep reinvesting them. And guys, I'm 37 years old right now. By the time I'm 60, and if I were to do this for 20 years, right, that's a lot of shares, right? That's a lot of wealth potential right there. So just incredibly powerful. So for me, what something like BTCI replaces, in my opinion, are the mutual funds, the index funds, the dividend stocks. I don't really see, those just don't have a place in my portfolio anymore. Maybe they do for you. It all comes down to what your specific goals are as an investor, what your risk tolerance is, etc. But this is why I love BTCI, guys. It is just, it's an amazing financial product that really harnesses the power of Bitcoin. All right, next, Stretch, STRC. I actually just started moving a large portion of my safe money into STRC. I had it on river.com where it was paying, right now it's paying 3.3%, but that's just been coming down as the Fed has lowered interest rates. And it's still pretty cool because it's paid in Bitcoin. That interest is paid in Bitcoin, so I'm stacking extra sats. That's that's pretty cool. But I'd rather earn 11.25%, and then I could always take that cash and buy more Bitcoin if I wanted to, right? So Stretch, so STRC, I'm treating right now as my medium-term capital storage, because the money that I'm putting into it, I already have earmarked for other assets in the future, like to cover payments and deposits and payments, et cetera, a couple of years into the future. So why not earn a really good yield on that while I'm waiting to deploy that capital into those various different things, right? So Stretch for me right now is medium-term capital storage, very, very low volatility. Its goal is to stay within the $99 to $101 range. Recently, during the Bitcoin crash recently, where it was down pretty significantly, we did see Stretch go down to as low as, I think, like $93.50 some odd cents or whatnot, but it very quickly rebounded to that $100 mark. In fact, I think it's at $100 as I record this. I did an entire video on how that works. If you want to learn more about Stretch and how it compares to something like BTCI, let me know in the comments. I'll send it to you. I'll put it in the description too. But as I record this, it is currently yielding 11.25%, guys, with very, very low volatility. And so again, what this replaces, why would I put money into a CD paying 3.5%? That's taxed every single year. Because another thing about the yield with STRC is that it's very tax efficient. It's considered return of capital. So you're not taxed on it in the year that you receive the distribution. It just lowers your cost basis. And then you pay, I think it's long-term capital gains when you actually sell STRC. So incredible tax treatment. All right, but like CDs, money markets, bonds, treasuries, like why would I give my money to the government to earn 4%, whatever, when they are completely insolvent, $2 trillion per year deficit, right? The money printer is just going crazy. So, they're increasing the money supply by 6 to 8% on average, which is what I consider the true rate of inflation. So we're not even keeping up with inflation, lending money to a government that continues to print the money, right? That devalues our purchasing power, that decreases our purchasing power, steals our purchasing power. Why would I do that? When I could give it to a company like Strategy that's going to take that capital, purchase more Bitcoin, put more Bitcoin on their balance sheet, and earn 11.25% for it. Just it's a no-brainer to me, right? So it's backed by 5 decades right now of Bitcoin. It has 5 decades of Bitcoin treasury runway. That's how much Bitcoin they have. 30 months of operating cash as well. So the dividend has a very, very long runway, all right? Right now, what I'm doing is I'm taking the dividends in cash. I'm actually still waiting to fully deploy the amount of capital I wanted to put into it, because I'm waiting for the funds to clear in my brokerage account. That's how new this is as far as my portfolio allocation goes. But right now, I'm just going to be taking the dividends in cash. That's just a preference because I'm reinvesting everything that I get from BTCI. So I want a little extra cash flow while I wait to deploy that capital, right? And once I have all that capital deployed into STRC, it's at the current dividend rate, it will net me roughly I think it was like $568 per month. I don't know about you guys, but I think that's pretty sweet, right? So not reinvesting it right now. That might change later on in the future. But this to me like completely replaced all of the like cash equivalent instruments like CDs, money markets, bonds, treasuries, right? And so I look at this as like this, it's a 3-layer Bitcoin portfolio where layer 1 is my foundation, where I have actual spot Bitcoin in cold storage. This is my long-term store of value, my long-term power. I think that's a good way to put it, where, at some point, like I will tap into it to, probably buy more assets, right? But that's the really, really long-term play. And then layer 2 is BTCI, very aggressively accumulating BTCI right now, as the price is just very, very suppressed at the moment. This is the growth plus income play for, just harnessing Bitcoin's volatility. And I'm actively reinvesting all of the distributions right now to acquire even more shares, which thus increases cash flow, so I could buy more shares the next month, right? And it compounds on itself. It's incredible. And then layer 3, this is my medium to somewhat long-term capital storage, high yield focused capital storage. I really like that phrase. That's how I'm treating Stretch right now. But as you can see, everything is Bitcoin centered. Now, again, this isn't where all of my money is. I have money in some different assets, but it's Bitcoin is just slowly just taking over my entire portfolio with these amazing financial products. As you can see, like I think is a good way to put it here at the bottom. All roads lead back to Bitcoin. That's what I'm experiencing right now. So final thoughts, guys. I think this is a good way to put it. The Bitcoin standard portfolio, right? Where Bitcoin, because of these amazing financial products slowly taking over the portfolio, it's taking over treasury strategies as well. I mean, how many companies out there are now buying Bitcoin in ridiculous amounts on a regular basis, as opposed to buying back their stock or maybe paying out dividends or putting that money into U.S. treasuries and bonds and stuff like that? They're accumulating Bitcoin now, and it's making a huge difference, right? It's taking over capital markets, right? You're seeing these, you're seeing like actual states, countries establishing strategic Bitcoin reserves. And, I think Stretch is also, and actually all the securities that strategy has come out with, it's changing how the capital markets operate. So it's just, it's an incredible thing to see. All right. So I think that's it. Bitcoin, yes, greatest, just to reiterate, greatest financial gift I think the average person has ever been given because of these things. And that's what I'm building my portfolio around. So anyways, I hope that helps, guys. If there's anything specific that you want me to expand upon, let me know in the comments. I would love to hear your feedback as well. What do you think about this? Are you experiencing the same thing? Is Bitcoin starting to take over your portfolio as well? I think it's a really exciting thing, but that's just me. So let me know what you guys think, and I'll talk to you in the next one. To your success. Matty Ice is out.